Yeah, hello all. Good evening. So welcome to today's expiry analysis. So let's get started with the dollar index first. As we see, dollar index is in a downtrend from a very long time, and it is just consolidating around this 101 support level. It is waiting for fresh macro cues, furthermore data, furthermore commentary from the Fed to decide on its future downtrend or reversal. So as of now, this is very positive to the equities in general, and its consolidation is giving a range bound action for our indices. So coming to Bank Nifty, today we see that after a very long time, the price is closing where it opened. So the price is almost closing where it opened. So typical expiry we can say with range bound action. I mean, the first candle itself was very bullish in the sense that it created a long lower wick. I mean, emerging above the previous yesterday's closing, and the delta is also pretty much green. There's not much loss of delta happening. So this was a bullish candle, and the opening trade was on the call side with this context, and I took the opening trade with this understanding. And then the post the second candle, we see some exhaustion. I mean, in the 15-minute time frame, you obviously feel that there is no exhaustion, but for precise entries and exits, you also have to have an eye on the 5-minute time frame. So when you look at the 5-minute time frame, it was this the entire 50K came from this first candle itself, this first candle. But after that, the next two candles are seeing a bit of exhaustion in the price, where with the increasing delta also the price is not able to travel upward. So we can see the price getting exhausted at this level, and in fact this was the level where there was highest call OI, that is to say the 42,300 strike. So this was the highest call OI, both as well intraday as well as the overall OI perspective. 42,300 had the highest call upon interest. So a price just took resistance at this level, and eventually it reversed. So as we can see, the price reversed, and since there is no much macro clues available, the price is creating this bi-directional move, and selling I mean, the retracement continued. So not much delta on the downward journey here. The again highest delta appeared of 24K, but we see emergence of lower wick appearing at the same demand area in the morning. So again, another call trade with the stop loss below would have been planned if somebody had missed the morning opportunity. So again, we see a bullish candle, almost a bullish engulfing type of candle here, and then the candle, I mean, the price reverses. But the price reversing on its way up, you could not see much of the delta here, right? All this is indicating of a delta of a range bound action, not much delta, in the sense that we see low delta candles. This is 15-minute time frame in Bank Nifty, and we are just seeing hardly 2.3K, 4.4K. So this shows lack of interest in today's expiry, and mostly the expiry to be range bound. So after that, this candle emerges. I mean, the final up move for this retracement. So it ended up with an upper wick, and again the selling resumed, all because of the increasing call open interest at that time. So and then again we see the emergence of selling at the same level. So we see that 4.2K worth of delta has come, but the price is displaced a lot. I mean, it has almost engulfed the previous candle. So you can come to some conclusion that again a round of selling can resume. So price eventually started to come down, and finally it again came to its daily low. For example, the morning lows, it tested the morning low again, and we see emergence of huge lower wick despite this candle. So this is the final. You can think of this as a climax selling candle, the context. So again, probably the low for the day is done. I mean, the same morning low, the same zone price tested, and again it was tested here without breaking it. So price, typical range bound action, nothing to add much. Price, even in this upward journey also, we can see that 6.9K worth of delta came. It was an increasing delta, again showing the interest that not there's not much selling interest um, in the overall downfall. And since there's loss of delta, so one final retest, and then price eventually went up. So this is also a good final trade if one would take for example this doji candle here. It is losing, I mean, that since the delta is negative, right, but this is a falling delta, so delta is negative and it's creating a doji candle, and especially at the day's low with no with not much selling context, one could safely presume that the low of the day is done, and this final up move could have been traded. But in my opinion, it's a since it is a range bound day, maybe one or two proper trades here and there, and then one could stay out of this market. So overall, it was a typical expiry range bound context, with not much delta. Also, we can see here, right? So this shows that the expiry itself is very very normal, typical expiry. Of late, we have been seeing trending expiries, but this was an exception. So hope this analysis was helpful. Thank you.